Joining us now is Samsara CEO and co-founder Sanjit Biswas. Sanjit, good to see you. So how'd you reach profitability faster than expected in this environment?
Well, hi, John. Thanks for having me on. We saw continued momentum, as you just mentioned, with large customers. So the revenue momentum has been there, and the company has been on a path towards free cash flow break even. We just achieved it a few quarters earlier than what we guided to because of that large customer and overall momentum we're seeing in the business.
Now, I think it's interesting that fuel savings are such a big reason why customers are coming to you, but at the same time, a lot of your growth is coming from beyond transportation. So talk about equipment monitoring, some of those other areas beyond fuel savings that are fueling your growth.
So what we're doing is connecting the world of physical operations to the cloud, helping them digitize, helping them modernize. Fuel savings is one of the values we're able to provide, but we can also help things with areas like driver safety coaching, asset utilization, compliance, and more. So for our customers, they're getting value in a number of different areas, and that applies across industries, not just in transportation and logistics, but areas like construction. We've got large energy utilities. We just signed National Grid, for example, public service groups as well. So if you think about New Jersey Transit, the city of Memphis, the state of Tennessee, these are all customers on our connected operations platform, and they're saving money in areas that go just beyond fuel, that include safety and others.
Yeah, I mean, obviously there's this large digitization and transformation that's happening, and that's secular. But you do sell into some more economically sensitive markets like transportation, like construction, like agriculture. Is there a point at which that cyclicality starts to play out in your business?
Well, I would say that these are customers and end markets that are used to economic cycles. So most of our customers have been around for decades, in many cases 50 or even 100 years. So they're used to planning through different kinds of economic cycles, and they're in different industries as well. So while we know that there will be ebbs and flows in the business, we also know that these are core parts of the country and really the planet's infrastructure, and they're going to be around. So that's what they're building towards, and that's what they're planning for, and we're helping them become more efficient. So it's really a vital tool as they think about how they can run their operations more efficiently.
Sanjit, when we first talked a few years back, you were making the point that the types of companies that you are building this technology for aren't used to being really tech savvy. And so I wonder, in this environment, when budgets are tight, are the contract conversations getting dragged out like we're hearing from other enterprise technology companies? Or because this is a new sort of conversation, maybe it's a cost savings conversation, are you finding that the momentum is different from what investors might be used to hearing from enterprise software companies?
I think our buyer is fundamentally different. We're not selling to the IT department. We're selling to the head of operations, which, again, for these businesses, for these industries, is core to what they do. So they're always trying to find ways to be safer and more efficient. For us, that conversation is around value and ROI. And as we talked about earlier, they can find savings in different parts of their organization very quickly with this data and with our platform. So it's been a very consistent conversation for the last several quarters for us. We're continuing to see that momentum. You see it reflected in the numbers. But this is a bigger industry trend that we're seeing, which is these organizations are digitizing, and they're doing it in a big way. And they're, again, 40% of the world's GDP. So it's just a massive number of different companies that are thinking about the same thing.
What is your approach to AI models specifically for some of these industries where you're doing work, transportation, equipment monitoring, et cetera? To what degree are you planning to develop your own? To what degree are you partnering with other firms to try to serve that customer to use the data that they're getting out of your system?
So AI is something we've been investing in now for several years, and really it comes down to making sense of this massive volume of data that's coming from these physical operations out in the field. If you think about the number of data points that comes from thousands of trucks operating at once, it's too much for any person to look at. So we've been investing in AI since really the early days of the company. We've had AI-enabled products for a few years, and that's what unlocks the value in all this data. It's not just data or technology for technology's sake. It's about finding value and finding ROI. So that's where we're investing, is in more AI models to help surface those insights, help folks be safer out on the roads, help with areas like fuel consumption. Maintenance is another area we're seeing a lot of interest in, as well as compliance. So these are all areas that really have data at their core. And if we can help surface insights from that data using AI and do it in real time, we unlock a lot of value for our customers.